It is 9:30 a.m. Pacific Standard Time. It is the 15th day of December 2025, and this is episode 1230 of Bitcoin and Sailor Buys More Bitcoin, which is exactly what happens right before we start the plunge. I swear to God, people hate Michael Saylor. It's like they're just waiting for him to announce before they just start dumping. It's almost as if they just got it out for the guy, and I can't figure out why. I mean, it's the most bizarre behavior that I've seen in a long time, and it's consistent. It's consistent. I mean, it's like every single time Saylor, tweets out something like, "Hey, he's bought more Bitcoin," all of a sudden it's like people are just waiting to pull the trigger and sell, and I don't know what the end game is supposed to be. Other than, yeah, sure, maybe they got like a whole bunch of shorts against MicroStrategy and they're trying to like just make a shit ton of money. But this just seems like if this is price discovery, then we're in a lot of trouble. Like in markets around the world, it doesn't matter what it is, because this is almost like directed directed gambling, right? It's like gambling with a purpose, and that purpose is not to try to, not as much trying to win as much as trying to destroy something else. I've never really seen an attitude in these markets that is like, hey, let's figure out a way to build something up. It's always like, how can we destroy something? And I find that kind of, I would say fascinating, but it's just really kind of ugly behavior. But again, if this is what if this is how we're getting price discovery in the markets, wow, that is going to suck. So we'll get into that one. And then let's see. Do Kwon got 15 years, and I can't remember when that sentencing happened, but there's already some new developments going on. And then we're going to run down to Brazil, where their leading private bank has made a recommendation. Then we're going to go over to Tajikistan again. Last week I told you a couple things about Tajikistan, but this is going to be like more of the shape of energy usage versus Bitcoin mining in regions that just don't have that much electricity to go around. Then we're going to talk about Trump and why he should pardon the developers of Samourai wallet. There's a good argument here from Juan Galt out of Bitcoin Magazine. And then, even though that I haven't really seen all that much miner capitulation, an ex-Canaan executive is saying that it's all China's fault that we've got a 10% hash rate fall in Bitcoin. But I mean, honestly, that's 10% down from a moving average of 1.16 exahashes per second. So it's like the security of the network isn't in question at all. And yet we are just like riddled with news about trying to just reflect everything in a negative light. So just, buckle up. It's Monday here on the Bitcoin and Show with me, your host, David Bennett, bringing you all the news that you can use and more about Bitcoin and macro from around the world. And we start this morning with Michael Saylor. Strategy has made a second straight $1 billion Bitcoin buy. And of course, the whales are like, sell it. Oh my God, sell it. It's good news. Sell it. Yeah. Well, Strategy, the world's largest publicly traded Bitcoin holder, added nearly another $1 billion worth of Bitcoin last week, marking its second consecutive mega purchase of Bitcoin, or rather as Bitcoin prices pulled back towards the $90,000 level. The company acquired 10,645 more Bitcoin for approximately $980.3 million, paying an average price of $92,098 per BTC. Strategy now holds 671,268 Bitcoin, purchased for a total of $50.33 billion, giving it an average acquisition cost of $74,972 per coin. As with recent purchases, the This acquisition was funded primarily through equity issuance. The company raised $888.2 million through sales of common stock, with the remainder coming from sales of its STRD preferred shares. Despite ongoing market concerns around shareholder dilution, the company has aggressively leaned on equity markets to increase its Bitcoin exposure. The latest buy comes amid a broader pullback in Bitcoin, which dipped below $90,000 over the weekend before stabilizing near $89,600, and MSTR shares were flat in pre-market trading on Monday. The purchase stands out not only for its size, but for its timing. While Strategy has been a steady buyer throughout 2025, most of its weekly acquisitions in recent months were relatively modest due to fundraising constraints. Over the past 2 weeks, however, Executive Chairman Michael Saylor has ramped up purchasing, signaling renewed conviction despite volatility in both Bitcoin and Strategy stock. Separately, MSTR confirmed that it will remain a constituent of the NASDAQ 100, maintaining its position in that index under the technology category. The company also pushed back against proposals from index provider MSCI, which is reviewing whether or not to exclude or continue to include Bitcoin treasury companies from its benchmarks. In the letter, Strategy argued that their proposed digital asset threshold is misguided and would have profoundly harmful consequences if initiated. MSCI is expected to make a final decision in January. The company, formerly known as MicroStrategy, pivoted from enterprise software to Bitcoin treasury strategy in 2020. The model has since been replicated by dozens of firms. Still, Saylor has remained unapologetic and bold in his purchasing decisions. As of December the 14th, 2025, Strategy reports a year-to-date BTC yield of 24.9%, showing its commitment to accumulating Bitcoin regardless of short-term market or equity price pressures. At the time of writing, Bitcoin is trading near 89,650. Well, not anymore. We've lost, I think we're at, where are we at? We're at 85,827 right now. That is a 2.6% change to the downside. So just be aware. It may look bleak out there, but remember, we hit like, what was it, 74? Not too long ago? Hold on, let me look at this. Yeah, let's see here. November 21st, we ended up, we ended up at a low of 83,451. So just, understand that somebody is out there, and they are targeting MicroStrategy in a big way. So it is what it is. But let's talk just a little about Kwon. These bleak victim letters helped seal Terra founder Kwon's fate. So some victims wrote some letters, and I guess the judge read them all. Ryan S. Gladwin from Decrypt says, there were potentially millions of victims of the $40 billion collapse of Terra's UST and Luna, a U.S. judge said during Terraform Lab founder Kwon's sentencing on Thursday. And 315 of those victims submitted letters that detailed suicide, bankruptcy, and health crises that all circle back to Kwon's actions that led to the 2022 downfall of the prominent crypto ecosystem. U.S. District Judge Paul Engelmeyer said that he read all 315 letters. Good Lord. According to reporting from Inner City Press, even staying up late and canceling plans to do so, calling the statements impactful. The judge asked Kwon if he'd read them all and offered to adjourn the hearing for him to do so, as 30 letters were filed with late notice. Kwon declined, but said he would read them at his earliest opportunity. Bullshit. Given the 15-year prison sentence handed down at the end of the hearing, he'll have plenty of time to catch up. The letters, which are all available for the public to read via official court logs, reveal the human impact of Kwon's fraud. Quote, the collapse of Terra Luna had a catastrophic impact on my life and on my family, an unnamed victim who claims to have lost $500,000 wrote. We lost our financial safety net, our retirement plans, and the stability we believed we had earned. End quote. Another quote, simple things like taking our children on outings, offering them special gifts, or planning any form of vacation are no longer possible. We have been pushed to the bottom financially, and every day has become a fight to stay afloat, end quote. Many of these letters detail losses from the thousands to the millions, with one victim claiming it led to bankruptcy. The impact of these losses had ripple effects that touched every aspect of their lives, from mental and physical health declines to the shattering of families and relationships. One victim, Anita Uyeban, said she was diagnosed with a health condition during that collapse, and that the suffocating stress of losing $200,000 has significantly worsened her symptoms to the point where she is in constant physical pain. Another victim, Nicholas, claimed that he lost $62,000 and he was earning 20% yield on, though, that now infamous Anchor protocol. This was Terra's most popular DeFi app, as it offered mouth-watering yield on UST stablecoins, which some viewed as a risk investment, or risk-free investment, that is, at least until the UST stablecoin lost its peg forever. He said that the loss caused a rift in his relationship that ended in divorce, splitting his family apart and ultimately forcing him to live with his parents. For some, it appears their financial losses were too much to handle. Quote, my friend and I were very large Luna investors based on Du's. He says Du's statement. He's talking about Kwon. Kwon's statements that the peg was restored automatically in 2021. A victim letter sent via email from Josh Golder reads, quote, I had a mid 8-figure loss in Luna. Yes, that's correct. 8 figures. And my friend later jumped off a building in Miami after telling his girlfriend that he lost his money in crypto. Ariel Givner, a crypto attorney and founder of Givner Law, said that Kwon's team declining to adjourn the hearing was almost certainly strategic and not dismissive one bit. This is because an adjournment could unintentionally elevate the emotional weight of the letters and shift a procedural hearing into something closer to a victim impact forum. It's worth noting that not all victims provided statements in the hopes of worsening Kwon's sentence. Yuabian, I cannot pronounce that name, for example, despite her deteriorating health, proposed that Kwon not go to jail, but rather be forced to create a system that would pay all of his victims back. Okay, let's just create that. Saying that the Terraform Labs founder is clearly a genius. Others wanted to see Kwon face the full force of law and receive the maximum penalty. Some onlookers speculated online that the judge was offering Kwon the opportunity to show remorse regarding the victims, a hurdle some believed that he failed. However, Givner pushed back on this interpretation. Quote, in my opinion, the judge was not trying to create remorse. Givner, who previously worked as a judicial clerk, told Decrypt, quote, when a judge raises the issue of notice or asks the defendant directly whether they wish to proceed, that is about ensuring procedural fairness and creating a clean record, not inviting an apology or an emotional response, end quote. Still, the judge cited the letters in the lead up to Kwon's sentencing, quote, victims, I have heard you and your letters, the judge said per Inner City Press. Quote, these are a few. My loss was $62,000. I believed it was low risk, Kay writes. I thought of suicide because I advised my father to invest $100,000 of his life savings. Another wrote, I can't support children now. Quote, the investors were taking a risk, the judge continued, but they were not taking the risk of being a fraud victim. So just, understand that. First of all, don't shitcoin. And these 20% yields that we were seeing, like, wrapped around Luna and UST and all that shit, none of that is possible. That's just not possible. You cannot generate those kinds of returns on damn near anything. And if you do, it's certainly short-lived, as these people found out. But this is one of the things that Bitcoin maximalists like me have always been saying. If you want to avoid this kind of shit, you just stick with Bitcoin. You don't have to go out into the field and start searching for the best shit coin because for whatever reason you've decided that your future wealth lies there. It doesn't. Your future poverty lies there. It's hard enough just with Bitcoin, especially on days like today and like back in November. And certainly on October the 10th when everything just kind of went, right? It's hard enough just with one. I mean, 315 letters, ladies and gentlemen. And yet still, people point at Bitcoin maximalists and say that we're trying to destroy them, that we're trying to get rid of these projects because we only want Bitcoin to live. No, that's not why we don't. Bitcoin lives whether we want it or to or not. What we're trying to do is let you know that the amount of scammers and grifters that came along attached with Bitcoin's creation is an immense amount of crap. They're just the worst people with the worst intentions. They have no empathy. They have no sympathy. That's not why they exist. They are tools of the dark part of the universe that just want to destroy you. They happen to be walking around in human form, though. So please, please, please listen to us. Do not get into shitcoinery. The yields are false. They don't exist. They never have. It's all a giant Ponzi scheme. 99.99999% of crypto is pure grift and fraud and crap. Please stay away from it. But if you do get into the mire, be sure to clean yourself up with SoapMiner at SoapMiner.com. Get his handmade tallow soap. Best soap in the business from SoapMiner.com. You can use the code Bitcoin and in the coupon code so that you get 10% off of your entire purchase. I've sold a lot of soap for SoapMiner. Soap got a hold of me and told me the numbers, and even I was kind of surprised at just how many sales that I've made for soap. So make some more for them. It's Christmas. Christmas is coming up. By the way, I think I'm pretty sure that, the date is over. If you're buying this soap for Christmas gifts, you don't, because he's not going to be able to get it shipped to you in time. So if you're going to buy soap today from SoapMiner, and you should, just don't buy it as a Christmas present because it's not going to get to you. But it will eventually get to you, and it is the best soap in the business. My son came out of the bathroom yesterday and he's like, okay, we finally killed that last bar of soap. Which new soap miner do we want to put in its place? I was calculating how long that bar of Earl Grey soap lasted for a family of 4, and it was like over 2 months. $7.50 if you're using fiat currency goes a long way with SoapMiner at SoapMiner.com. You can get all kinds of soap from SoapMiner. Check it out, man. Cedarwood Tallow, which is the soap that we unveiled yesterday. It's going to be our new soap for the next couple of months. Pine tar soap. He's got goat's milk tallow soap. He's got lemongrass tallow, orange and clove, lavender, tea tree, peppermint, Earl Grey, and redacted. He's also got some body balms, and he's got a line of deodorants, and I think he's got a lip balm out there. Let me look on the second page. Yeah. He's got a peppermint lip balm and then just a regular unflavored or unscented tallow lip balm. Get all of your body needs done at SoapMiner at SoapMiner.com. Use the code BitcoinAnd for 10% off your entire purchase. It allows SoapMiner also to understand that I made yet another sale for him here on the Circle P. It's where I bring plebs with goods and services just like you to plebs just like you who want to buy said goods and services. But you will be buying it in Bitcoin, because if you ain't selling it in Bitcoin, you're not in the Circle P. But now we are going to be in Brazil for this next story. Brazil, the country's leading private bank, has recommended a 3% allocation to Bitcoin. And then, Saylor decided to announce that he bought more Bitcoin, so the whales apparently they're all about trying to attack Saylor, and they don't really care that one of the largest countries in the world is that their banks are saying, hey, you're going to need to get into some Bitcoin. By the way, this is written by, now this is just from Atlas 21. They never attach a name as the writer. Itaú Asset Management The investment arm of Itaú Unibanco, Brazil's largest private bank, has published a recommendation encouraging investors to allocate between 1 and 3% of their portfolios to Bitcoin over the coming year. In a recent research report, Renato Id of Itaú Asset highlighted how a global environment marked by geopolitical tensions, shifts in monetary policy, and persistent currency risks strengthen the case for including Bitcoin as a complementary asset within investment strategies. The expert described Bitcoin as, quote, an asset distinct from fixed income, traditional stocks, or domestic markets with its own dynamics, return potential, and, due to its global and decentralized nature, a currency hedging function, end quote. Id argued that a small but consistent allocation to Bitcoin can help mitigate risks that traditional assets fail to cover. Citing internal bank data, he pointed to a low correlation between BIT I11, the locally listed spot Bitcoin ETF, and other major asset classes, supporting the case for adding a modest Bitcoin position to improve overall portfolio balance. Quote, by allocating around 1% to 3% in their investment portfolio, investors will in fact be taking advantage of an asset that generates diversification, the bank wrote. In September, Itaú Asset established an independent crypto division and appointed Jacob Marco Braga de Cahuna, I can't pronounce that, formerly executive at Hashdex, to lead it. The unit was built on Itaú's existing digital asset offerings, including a Bitcoin ETF and a pension fund with exposure to digital assets. Itaú also plans to develop a broader range of products spanning fixed income-like investments to higher volatility strategies such as derivatives and staking. So Brazil's largest private bank, not a central bank. Okay, it's a private bank, but still it's their largest one. And Brazil has a very large population. It's a very large country. It's not third world by any stretch of the imagination. It's Brazil is a first world country. And their largest private bank is now saying, hey, between 1 and 3% allocation into Bitcoin. Not shit coins, but to Bitcoin. It did, like, I didn't cut out or edit this in any way. They mentioned nothing about cryptocurrency. They just said Bitcoin. 1 to 3%, largest private bank. Honestly, that's kind of impressive. Let's run the numbers. Energy getting clobbered over here on CNBC.com. Brent North Sea is down over a point to $60.43. West Texas Intermediate down 1.25 to 56.70. That's pretty damn low, man. Natural gas falling again another percent to $4.07 per thousand cubic feet. Gasoline down 1.25 to $1.73 a gallon, and Murban crude down 1.25 to 61.35. Metals are ripping today. Palladium is up 5.5 points. Gold is up 0.13% to 4,333 and 8 dimes. Platinum is up 3.25. Silver is up 2.5, and copper is up just 1 point today. Ag is getting hammered. It's all in the red except for cotton, our winner for the day, at 0.28% to the upside. Biggest loser is chocolate, 6.43% to the downside. God only knows what happened there. Live cattle up 1/5 of a point. Lean hogs down a full point, and feeder cattle basically sideways, slightly in the red. The S&P is down 0.09%. NASDAQ is down 1/5. Dow is down 0.1%, and the S&P Mini is down 1/4. The economic news on housing comes out tomorrow. That's not helping. Everybody's bracing for what the hell those numbers are going to bring. It's just the monthly cycle of news that they spread out all throughout the month so that we know what the hell's going on and everybody reacts to it. Generally speaking, they try to, I don't know, not as much hedge their bets as much as make their decisions early, right? They just want they're probably thinking that housing starts are going to say that they've fallen, and they probably have fallen because everybody keeps saying that this economy, the world's economy, is back in business. No, it's not. A pandemic did permanent damage to the global economy. It is what it is, and we're going to have to deal with it. We're at $85,710. That is a $1.71 trillion market cap. We can only get 19.9 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,962,279.29 of, and average fees per block are low. 0.02 BTC, taken in fees on a per block basis. There's about 22 blocks carrying 49,000 unconfirmed transactions waiting to clear at high priority rates of 3 sats per VByte. Low priorities get you in at 0.6. Mining. And we're still in exahash, or not exahash. I made a mistake. Zettahash. We're in zettahash territory. 1.04 zettahashes per second gives us as much security on the Bitcoin network as you could possibly ask for. And from the Domino Falls, Friday's episode of Bitcoin and Oak Grove with 1,300 sats says, I do mean to boost your episode, but I often let perfect get in the way of done. I joined a book club online that is reading Finish by John Acuff. It is helping me eschew my perfectionist of failure, or if failure, and get things done. I didn't calculate your sats, I just rounded. Regarding the rule change, quote, the purpose of the system is what it does, not what it claims to do. That was said by Stafford Beer. BTC Master with 450 says nothing. C4OZ with 2268 sats says, you think Santa owns Bitcoin? Yes, I do. Vinny AXKL 700 says, I picked up a pound of cacao, thanks. I've been on the hunt for high quality, low garbage chocolate for a while. Nostr, Bitcoin, and the Circle P never fail to deliver high quality products. Our children's children will live forever. Yeah, I can't wait till my chocolate comes in. Let's see. I can't read the name on this one, but it's 200 sats and it says nothing. Brent says, well, there's no sats here, but it says ordinals? No. Ordinals are a hack to sneak JPEGs into the permanent UTXO data storage. It would be too slow and ridiculous to use that technique for tokenized securities. We have a protocol that is designed for tokenizing thing on Bitcoin, RGB. Maybe you missed the announcement, but you should definitely check out the Bitcoin RGB protocol. I do know of the RGB protocol. I just haven't, really crawled around it. I kind of got jaded with the whole ordinals thing, but I'll take your word for it, man. I will definitely take your word for it. Nick Dose with 121 says cheers. And then we got Rod Palmer from Bugle News, which is another podcast. You go check out Rod Palmer and Bugle News. Sends me 10,000 sats. Dude, Rod, thank you, my man. 40 hours per week. And that's always, 40 hours of Bitcoin podcast a week. Pies with 121 says, thank you, sir. No, thank you. And that's the weather report. Welcome to part 2 of the news that you can use. Tajikistan's mining crackdown shows how energy strain shapes crypto policy. SK Aurora from Cointelegraph is writing this one. On December the 3rd, 2025, Tajikistan's parliament formally approved amendments to its criminal code that makes it a criminal offense to use electricity illegally for cryptocurrency mining. The new law introduces Article 2532, titled Illegal Use of Electricity for the Production of Virtual Assets. Under the new law, anyone found mining digital assets using stolen or unmetered electricity faces serious penalties. The basic offense carries fines ranging from anywhere between $1,650 to $4,000 US. If the act is committed by a coordinated group, penalties rise to $4,125 to $8,250, or 2 to 5 years in prison. In cases involving large-scale or organized operations, offenders may face up to 8 years in prison. The bill was presented to Parliament by Attorney General Habulo Vahidozda, I can't pronounce it, who warned that unregulated mining had already caused regional power outages, millions in losses, and an uptick in related crimes. He told lawmakers that damages from illegal mining had reached about $3.52 million US, and that several criminal cases were under investigation. Tajikistan's decision comes amid one of the most severe energy crises the country has faced in recent years. The country relies heavily on hydropower, and low water levels in reservoirs have forced authorities to ration electricity during the winter. In many areas, residents receive only 2 to 4 hours of power each day. Officials say unlicensed mining farms are worsening that situation. These operations often connect to the national grid illegally or bypass meters altogether to avoid paying for power. The result is not only significant financial loss, but also serious damage to power infrastructure. And Member of Parliament Shahut Genzoda told lawmakers that a typical application-specific integrated circuit mining device draws about 3.5 kilowatts of power, while more advanced models can draw up to 6. He said large mining farms running thousands of these machines place an enormous strain on the grid. Ganizoda added that perpetrators often tamper with wiring and meters to cut costs and maximize profits. He also noted that illegal mining can contribute to tax evasion, untraceable financial transactions, and attempts to conceal or launder criminal proceeds. This new legislation is designed to protect both the country's economy and its energy security. Once signed by President Rahman and published in state media, the law will take immediate effect. Tajikistan's move is part of a broader international shift. Around the world, governments are rethinking their stance on cryptocurrency mining as energy costs rise and grids become strained. In Malaysia, authorities uncovered thousands of illegal mining sites that siphoned off electricity worth more than $1 billion over the past few years. And in Kuwait, officials launched a nationwide operation in 2025 to shut down unauthorized mining farms after power shortages worsened. Electricity usage reportedly fell by more than 50% in one area following the crackdown. Even in countries that once embraced mining, such as China and Kazakhstan, energy shortages and rising environmental concerns have led to tighter regulations and, in some cases, outright bans. Many of these governments now treat unauthorized mining as theft or economic sabotage rather than a simple administrative violation. The common thread is clear. Where electricity is cheap, subsidized, or poorly monitored, crypto mining tends to surge. When energy becomes scarce, regulators step in to protect the grid and ensure the public has access to potential power. Tajikistan's new law highlights how cryptocurrency mining has shifted from a financial curiosity to a matter of national infrastructure and energy policy. Mining Bitcoin and any other proof-of-work cryptocurrency consumes large amounts of electricity, and when done illegally, it creates a double burden. First, it drains the limited energy resource that should be available to households and industry, and then secondly, it deprives the state of revenue and raises maintenance costs as infrastructure is damaged. For countries with fragile power system, this combination can be very hard to manage. In Tajikistan, authorities hope that criminalizing unauthorized mining will deter offenders and help stabilize the power grid. The law also signals to investors and businesses that the government is serious about regulating digital asset activity. The move comes as the country strengthens penalties for other forms of power theft and non-payment. Those offenses can already result in fines of up to $9,900 or prison sentences of up to 8 years. The tightening of rules in Tajikistan and elsewhere is likely to accelerate what analysts call mining migration. As one country enforces tougher penalties, miners often relocate to jurisdictions with more lenient rules or cheaper energy. Need to come back to that one. Let me highlight that one. All right, this pattern has played out before. When China banned crypto mining in 2021, much of the industry shifted to countries such as Kazakhstan, the United States, and Russia. But as some of those regions experienced grid strain, many have since reevaluated that stance. Experts say the future of mining will increasingly depend on access to renewable or surplus power. Operations that rely on sustainable energy are less likely to attract regulatory scrutiny. Some blockchain networks are also moving toward proof of stake models, which typically require far less electricity. And for Tajikistan, the hope is that the new penalties will discourage illegal mining altogether rather than push it further underground. Tajikistan's decision underscores a growing recognition that crypto mining is not just about digital finance. It touches energy security, infrastructure resilience, and environmental policies. By making illegal mining a criminal offense, the government aims to send a clear message that energy misuse will not be tolerated. In a country where electricity shortages regularly affect daily life, the measure is as much about fairness as it is about technology. And for miners worldwide, this example is a reminder that cheap and free electricity comes at a cost. As more governments treat energy theft as a serious crime, the global map of crypto mining will continue to shift toward regions that can balance innovation with responsibility. In Tajikistan, that balance now means one thing above all. In the country, mining with stolen or unmetered electricity can now trigger criminal penalties, including prison time. So let me go back up here. Let me reread this because it sparked something in my head, and let's see if I can grab onto it again. The tightening of rules in Tajikistan and elsewhere is likely to accelerate what analysts call mining migration. As one country enforces tougher penalties, miners often relocate to jurisdictions with more lenient rules or cheaper energy. Yeah, they have in the past. But these mining operations have become very large. And while in 2021, it was probably, fairly, let's call it comparatively, relative to right now, was probably a hell of a lot easier to up and move an entire mining operation in 2021 than it is now at the end of 2025. These things are fucking immense. It's like I'm looking at mining operations that are they're staggering in size. So here's what I think happens. As these mining companies grow particular installations to a particular size, they won't have the option to move. It will just be too damn expensive. So they will have two choices. They will either clean up their act and pay for the power and, not try to, wire in from the grid by, like hiring some idiot off the street to try to, do the electrical on that. Or they just, they just pay for the power. They just get properly metered and they pay for the power, because they're not going to have the kind of options that mining companies used to have in 2021 when it was a relatively small matter to just up and move. So that regional arbitrage, I don't think is going to play as big of a game in 2026 and beyond as it did here. The other option for them to do is to go into AI, but then again, you're talking about people that are stealing electricity. Are they really going to do that for AI? So what's a third option is to just close down and sell all their shit and get out of mining altogether. Still, this brings us to the fascinating point about Bitcoin mining, is that it can be decentralized and it should be decentralized. And I think this particular situation of countries cracking down on illegal energy consumption is going to put a little bit of pressure that drives Bitcoin mining a little bit more decentralized. Now, why Trump should pardon the developers of Bitcoin non-custodial Samourai wallet. This is Juan Galt writing for Bitcoin Magazine. So, on December 18th, days before Christmas, Kwon Rodriguez, co-founder of the Bitcoin Samourai wallet, will have to surrender to prison. His crime? creating a software tool that gave Bitcoin users comparable privacy to that which banks are expected to provide. Samourai Wallet, the brand and technology stack built by Rodriguez and William Hill, was shut down by the U.S. government in April 2024 on a variety of charges, including money laundering. So what does it mean to transmit money? Because that was one of the other issues that was talked about in this case. According to prosecutors, custodial control over user funds is no longer a requirement to need an MSB license. A USB cable transfers data from one device to another, and a frying pan transfers heat from a stove to the contents of the pan. Although neither situation involves exercising control over what is being transferred. If the DOJ can indict a frying pan, then USB manufacturers better lawyer up. Remarkably, even FinCEN disagrees with the DOJ's novel legal interpretation of what constitutes a money transmitter. As guidance at the time said, non-custodial services could not be money transmitters because they do not exert any control over money flow. FinCEN reasserted this fact to the DOJ prosecutors in a written statement, but they went forward with the charges anyway. This critical fact was withheld from the defense for almost a year. When it was finally revealed, quote, the judge denied the motion to present this evidence in the hearings without even an argument, according to Rodriguez. Critics argue this misconduct by the DOJ prosecutors is a violation of Brady versus Maryland, denying access to material that could have undermined the unlicensed money transmission charges, or, as Donald Trump would put it, the prosecution was rigged. Zach Shapiro, head of policy at Bitcoin Policy Institute, warns the Trump administration and American software industry about the potential ramifications of this legal case, arguing that, quote, collapsing the distinction between developing a tool and operating a service would introduce an untenable level of risk for anyone building privacy-enhancing or security-critical software. Quote, Rodriguez and Hill ultimately accepted plea arguments in the face of substantial sentencing exposure, even though government records undermined the central regulatory theory of the case, Shapiro added in a letter published on the BPI website, asking the Trump administration to pardon the Samourai Wallet developers. Fundamentally, the prosecutorial approach in the Samourai Wallet case risks establishing an influential precedent that threatens the financial privacy of American citizens and stifles innovation in the U.S. crypto industry. It could shape future prosecutions and regulatory developments, potentially reclassifying non-custodial services as money transmitters under federal law, requiring national MSB registration with FinCEN, and prompting stricter state-level licensing in jurisdictions like New York or California. Echoing the trial against Ross Ulbricht a decade earlier, this rigged case against Samourai Wallet was set up during the Biden administration with support from anti-crypto politicians whom Trump defeated in the 2025 elections with the popular mandate. During his campaign at the 2024 Bitcoin Nashville speech, Trump said, quote, I will always defend the right to self-custody, and got major support from the Bitcoin and crypto industries through the shared vision of making the United States the crypto capital of the world. Quote, I pledge to the Bitcoin community that the day I take the oath of office, Joe Biden and Kamala Harris's anti-crypto crusade will be over. Many libertarians in the broader crypto industry see entrepreneurs like Kwon Rodriguez and William Hill in the same category as Roman Storm and Roman Sterlingov of Tornado Cash and radio host Ian Freeman, as nothing more than political prisoners of an entrenched banking cartel. David Sachs, the venture capitalist and White House AI and crypto czar, should also pay attention to this issue. Otherwise, what does it even mean to be a crypto czar? If Bitcoin wallets end up regulated the same as banks, despite having no counterparty risk, then those interests are those interests really being served? You know, is it Main Street's interest being served? Is it Wall Street's interest being served? While the Trump admin has been very conservative during the DOJ's prosecution and trial of the Samourai wallet devs, and perhaps understandably so. That stage of the legal battle is over. It is time for the Trump administration to meet its promise to the American public and defend self-custody and the crypto industry in America. It is time for Trump to set the record straight and pardon Kwon Rodriguez and William Hill, as well as the Tornado Cash developers, while we're at it anyway, lest we have another Ross Ulbricht-style miscarriage of justice. The Bitcoin and crypto industry is well behind this effort and has begun gathering signatures at change.org, totaling over 5,000 so far and growing, with the only official fundraising campaign at Give, Send, Go, and both of those are links in this article. Should Trump pardon the Samourai wallet developers, he would be sending a clear signal to those who want surveillance-based central bank digital currency systems to enslave Americans and the world that Americans will not stand for it. That the United States stands with the fundamental human right to privacy, dignity, due process, and the presumption of innocence, and not the tactics of intimidation developed by the likes of Joseph Goebbels, where privacy is a crime. Wow. Mass indiscriminate surveillance without a warrant, without due process, that's the real crime. Okay, so signatures at change.org, 5,000 is a little low. We're going to need a lot more signatures than that. So the link to this news story will be in the show notes, and you'll be able to find that and go to it, and then just go down to the very bottom of this particular article and look for gathering signatures at change.org. And that'll take you exactly to where you need to go to sign your name to this particular petition here. In fact, hold on for a sec. Oh, okay, so I just went there. There are now 6,947 signatures, and I am signing the petition now, and I am allowing it to display my name as one of the signers, because this is important to me. So let me just get this signed, and hopefully the computer will not freak out on me. Okay, my support is not complete yet. What do I need to do? Oh, he does. Okay. This wanted me to give like $3, and I'm in the middle of doing the show, so I'm going to have to come back to that and do it later. I will copy the link though and send that out to other people. So get the link in my show notes, go to the story, and then go to that link and sign your name to the petition. We need a lot more than 7,000 signatures. All right, just saying. All right, last up for the day. Ex-Canaan executive blames China shutdowns for 10% Bitcoin hash rate fall. Adrian Zmunsky, Cointelegraph. Bitcoin's hash rate fell by about 10% in a single day on Sunday, with Jinping Kong, former co-chairman of Bitcoin mining hardware product producer Canaan, attributing it to mining farms shutting down in China's Xinjiang autonomous region. In a Monday X post, Kong said Bitcoin's hash rate dropped by about 100 terahashes per second since Sunday. He claimed the drop was caused by at least 400,000 machines shutting down, based on an estimate of 250 terahashes per application-specific integrated circuit miners. Kong tied the change to Bitcoin mining farms shutting down in China's Xinjiang autonomous region, and Cointelegraph was unable to verify the claims independently, but Kong's position as a former co-chair at the Chinese Bitcoin mining ASIC producer lends some credibility to the assertion. According to YChart's data, Bitcoin's hash rate dropped from 1,053 terahashes on Sunday to just under 943 terahashes per second on Monday. This is equivalent to a loss of over 10%, or 110 terahashes per second. Still, the network's total hash rate is an estimate inferred from network statistics and cannot be precisely measured. That's correct. It cannot be directly measured. We don't know. We can only infer from difficulty level, the average amount of time it takes for blocks to actually get verified, all of that. Okay. That is the only way that we can even guesstimate, and it is a guesstimate of what the hash rate actually is. But China has historically had a significant presence in Bitcoin mining, but it has also proved to be an unreliable source of hash rate. Before 2021, China accounted for 65% of Bitcoin's hash rate, until the Chinese government moved to stop mining activity that year. And then in 2024, mining operations resumed across China, with October hash rate index data showing China now accounting for 14% of global Bitcoin mining. Crypto Kwon instead estimates China's contribution to be between 15 and 20%. And late last month, Reuters reported that individual and corporate miners exploit cheap electricity across China despite the ban. Kong is less than happy about the situation, saying that with Xinjiang's Bitcoin mining farm shutting down, the United States wins without lifting a finger. Probably right. Kong's comments come as the United States domestic Bitcoin mining industry grows at an increasingly rapid pace. At the end of August, Bitcoin mining company Hut 8 announced that it was building not one, not two, but 4 new Bitcoin mining sites in the state of Texas, Louisiana, and Illinois, adding 1.5 gigawatts of capacity. Hut 8 is the parent company of American Bitcoin, a Bitcoin mining and treasury company linked to the Trump family, and went public through a merger in early May. The company's board of directors includes Eric Trump, the second eldest of U.S. President Donald Trump's 3 sons, cementing the idea that U.S. leadership is also betting on Bitcoin mining. The U.S. is also taking on China's Bitcoin mining and ASIC industries more directly, because late November reports suggested that the leading Bitcoin mining ASIC producer, Bitcoin based in China, that's weird. That's not the name of that company, is under investigation in the U.S. over national security concerns. They're talking about Bitmain. I don't know why they wrote Bitcoin. Whatever. It's Bitmain. The investigation aims to determine whether the hardware can be remotely controlled to spy on or sabotage the U.S. power grid. Measures imposed following the inquiry may also affect the Trump family, because American Bitcoin acquired a fleet of 16,300 Antminer units from Bitmain. And in October of 2024, U.S. authorities investigated Bitmain-linked China chip designer Zemin Softgo over an alleged business relationship with U.S.-sanctioned company Huawei. And just a month later, the U.S. Customs and Border Protection Agency halted the delivery of thousands of Bitmain ASICs. U.S. authorities only began releasing that hardware in March. So, yeah, there you go. I'm still gonna be. I'll be checking the hash rate. I'm not seeing that dip today. So, but when I'm looking at mempool.space for that particular, see how many terahashes or was not terahash. What the hell? Not exahash. I can't remember. Why can I not remember? Hold on. Because it's bugging me. I hate it when I can't do that. Zettahash. I'm not seeing the drop that they're talking about here. So maybe mempool.space takes a little while to catch up. Who knows? Maybe tomorrow will be a completely different number, but tomorrow will come hell or high water. So that's all the news that I've got for you today on this Monday's edition of Bitcoin. And Wednesday, I'm not going to be here. And Thursday, not going to be here either, because those 2 days are road travel days. And Friday, maybe not. It depends on how I feel, because 2 days of road trip, because these things are like, there's one 10-hour day and then there's one 8-hour day, and add them up, and it'll take a lot out of you. So Friday could be iffy, but I will be coming to you tomorrow at least, and then on Wednesday we take off to Golden, Colorado, and I will see you there on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.